thank you most sincerely for finding time to join us on today's episode of Tax Matters. My name is Olumuyiwa Matuloko. How's your week been and how's business going? Let's begin with the Voluntary Assets and Income Declaration Scheme. As you must know by now, the VAT's window and door closed on Saturday, the 31st of March 2018. 2 more weeks to go. And going by what the Honorable Minister of Finance and the Executive Chairman of the FRS have been saying in recent weeks, there is no extension in view. Read our lips, no extension. And so we ask you, have you filed under VATs? And it's so simple to do. All you need to do is to visit any tax office, be it federal, be it state. All tax offices have VATs desks. And of course, as a way of preparing yourself for that visit, you can log on to the VATs website, www.vaids.gov.ng. On that website, you'll find both individual and corporate forms. And of course, you know that VATs concerns all taxes, be they personal or corporate. All taxes, personal income tax, capital gains tax, value-added tax, company's income tax, petroleum profit tax. We ask you, have you filed? I have filed, and I found it simpler than I thought. Simple questions are asked of you of your tax history going back 6 years. The immovable properties that you own, that is land and buildings here and abroad. Movable properties like cars, like yachts, like jets. And of course, investments like shares and bonds. Those who filed before the 31st of December 2017 enjoyed waiver of both interests and penalties. For those who are just going to file now, that is before March 31st, you will still get full waiver of penalties. And that's quite a lot. Of course, all the other perks are still available. No tax audit, no investigation, no prosecution, and of course, assurance of full confidentiality. Any information that you submit under VATs, as indeed they do in all tax offices, will not be shared with any third party. Of course, the sweetener. If you are cash-strapped and the determined tax liabilities are a bit difficult for you to cough out at once, you have the opportunity under VATs to spread the payment over 3 years. Nothing can be sweeter than that. So, like that child says in that advert, my brother, my sister, go and file under VATs tomorrow morning. Thank you for staying with us. Let's talk Federal Government Budget 2018. Nigerians are waiting with bated breath for the quick passage of the Federal Government Budget for 2018. You recall that President Muhammadu Buhari laid the 2018 budget of the Federal Government before the joint session of the National Assembly on Tuesday, the 7th of November 2017. Highlights of the budget include a projected expenditure of 8.6 trillion naira, which is expected to be funded by a projected revenue of 6.61 trillion and debt borrowing of 2.01 trillion naira. Taxes are expected to contribute 6.747 trillion, made up of the 6.61 and 305 billion naira from the Voluntary Assets and Income Declaration Scheme. 56% of the expected or projected tax revenue will come from non-oil taxes in the sum of 3.77 trillion naira, while 39% will come from oil taxes, amounting to 2.66 trillion naira. The other week, the Chartered Institute of Taxation of Nigeria (CITN) hosted a seminar on the 2018 budget, which it considers a tool for consolidating economic recovery and catalyzing growth. Held at the Institute Secretariat in Lagos, it was graced by the Director General of the Budget Office himself in the person of Mr. Ben Akabuese, eminent analyst and consultant Mr. Kweme Agbaje, and Mr. Taiwo Yedele, partner PwC, who is also the Dean of the Directors Faculty of the CITN. President CITN Chief Cyril Ede was represented at the seminar by his Vice President, Ms. Olajumoke Simplis.
Our institute is delighted that government has taken decisive steps towards placing emphasis on taxation as the principal source of government revenue. The launch of the Voluntary Assets and Income Declaration Scheme, VAT, is a right step towards increasing tax compliance. It is noteworthy that provisions for capital expenditure is on the upward swing. Even more assuring is the huge capital releases made in the 2017 fiscal year. This largely contributed to stabilizing and boosting the economy within the period. It is our hope that this scenario will be improved upon in the 2018 fiscal policy.
Thereafter, Mr. Agbaje flagged up the intellectual feast. He began by talking about the Economic Recovery and Growth Plan, ERGP, of the federal government, which emphasizes the role of taxation and tax revenue.
So the three pillars, as it were, of the ERGP was to restore growth, to invest in people, and to build a globally competitive economy. Accelerate non-oil revenue generation. I suspect that 2018 will be the year in which we'll have progress on the tax funds. There are tax experts here who can talk more about that. I suspect that all these initiatives around voluntary assets and income declaration and all of those other policies may indeed reflect. So we're working towards it, but in terms of objective targets, I don't think we've moved the bar yet in terms of shifting the tax to GDP ratio.
Mr. Ben Akabueze spoke about the place of taxation in modern governance.
Taxation plays a critical role in the finances of any government. Indeed, in modern governance, it is the principal way in which governments are funded. It is indeed at the heart of the social contract, which is the basis for modern governance. The social contract says that the sovereign has, rights to impose taxes on people, and in return, an obligation to deliver certain goods and services to the people. In Nigeria, for a long time, I argue that this social contract, which is the basis for modern governance, was vitiated, especially in the long years of military rule, where it was almost like, well, we don't want to be accountable to you, so we're not going to worry you about taxes. We're just going to spend, natural resource fund monies from sale of. So even though we always had the cliche taxpayers' money, but the reality is most of us weren't paying, taxes. It is empirically proven that when people actually pay taxes to government, they hold their governments more accountable. They take a greater interest in what is happening and how the money is utilized. So we have done ourselves a service sort of also by our attitude towards taxation in this country, and it's wonderful that I'm standing today on the platform of the Chartered Institute of Taxation, to make this point.
Mr. Akabueze x-rayed the role that taxation has played and continues to play in the Nigerian economy.
Over these years, many years of dependence on oil money, our entire economy, all the other sectors, had also become heavily import dependent. And while the oil sector accounts for only about 10% of your GDP, the oil sector was accounting for 70% of revenues and 95% of foreign exchange earnings. And all the other sectors are heavily dependent on foreign exchange to operate. So once foreign exchange supply to the economy is constrained, all the other sectors begin to hurt. So, and in the foreseeable future, oil will remain the major source of foreign exchange until you achieve fundamental restructuring of the economy, which isn't going to happen in 1 or 2 or 3 budget cycles. And so we cannot then run away from. So what we need to do is appreciating that, to basically focus on oil, understanding that for many reasons the window that you have with oil revenues is not that long, and try and optimize the revenues from that sector, and as they come then, very purposefully begin to then invest in other sectors to create a sustainable, diversification. The other initiatives, increase in excise duty rates on alcohol and tobacco. Right now in Nigeria, excise duty is only levied on alcohol and tobacco. The law actually provides for a much longer scope. But some years back in the previous administration, there was an administrative decision to restrict it to only alcohol and tobacco, and that is being sustained. But in addition to increasing the rate, the other fundamental reform that is happening is, hitherto, excise duty was applied on an ad valorem basis. So it says it's a percentage of your cost. So what then happens is, if you and I are both producing these microphones, I produce this and I declare my production cost as 100 naira. My excise tax will be that percentage on 100 naira. If you declare yours as 200 naira, it will be the same percentage on 200 naira. So you'll be paying more than this. Whereas all that may be happening is that you are simply more transparent with your cost than I am. And so the more, the companies that are more transparent in their costing and their record keeping were being analyzed. But best practice globally is to apply excise tax on what is called a specific basis. So if we determine that one microphone attracts excise of 50 naira, if you like, go and cook your own book, say it is only 1 naira it costs you to do this thing, you will pay the 50 naira. The other person will pay 50 naira as well. Just a base illustration of that thing. So with these two reforms, we expect to see improvements in revenue.
Like Mr. Akabe said, Mr. Oyedele, the Dean of the Direct Tax Faculty of the CITN, advocated for a greater role for taxation and made suggestions in that regard.
If you look at the budget, you see the amount we budgeted for taxes. See all of them. See, they look like what accountant we call other income. You know when you finish calculating, they are so small, they look like other income. So we know in the ERGP, we are planning to do a lot of fantastic things. I do also, like Mr. Agbaje said, I do agree with the ERGP. It's a fantastic document, but we have to implement it. Otherwise, it's not worth the paper on which it is written. If you look at tax to GDP ratio, as of 2016, it was 6%, and we said it was too low. The bad news is that based on the GDP data I just released, our tax to GDP ratio for 2017 is now lower than it was in 2016. I have estimated it at about 5%, and I can tell you how I calculated it. FRS collected 4 trillion last year. Custom collected 1 trillion. All the states combined collected less than 1 trillion, but let's round it up and assume it's 1 trillion. Nigeria Postal Service and local government under 1 trillion. Put it all together, it's about 6.5 trillion we collected in taxes. And our GDP ratio, our GDP nominal value now is about 124 trillion. If you do the maths, our GDP tax ratio is now about 5. What that means is not only must we grow our tax revenue, we must grow faster than the growth in the economy to be able to sustain what we are looking for. Look at it, even African countries, they are doing very well. So this is not even about OECD and the United States. Even South Africa there, even Kenya, even Ghana. Let's even just get to the level where they are, 15 to 20%. Okay. Okay, why is it so difficult to get tax to GDP ratio to improve? It's because sometimes we talk about tax in isolation. We want to beat people up so that they can pay. We're not asking the fundamental question about on what would they pay. If you have 40% unemployment, if you beat those people and they died, they still will not be able to pay tax because they just don't have it, right? So, but if you create the employment, you can then beat people up to pay, and then they will pay. If industries are making profit, you can collect company income tax. If people have employment, they can buy and you can collect VAT. So tax is never an item to look at in isolation. So we need to address administrative capacity, data and harmony of those data, then informal sector and trust deficits. People don't trust government, government does not trust the people.
Of course, the papers were robustly debated by the audience.
Value-added tax is a tax paid on all goods and services and remitted by the seller of the goods or provider of the service to government. 5% VAT is added to the total cost of goods and services in Nigeria, and when remitted to government is used for funding development. The VAT you pay will be used by government to develop our transport infrastructure like roads and railway lines, to continually improve our educational sector by building more schools and upgrading existing ones, to provide adequate security and a better quality of life for us all. Pay your VAT. Make your contributions to the development of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
Still on the budget, we have shown in the preceding clips the role that has been carved out for taxation and by extension the tax authorities in the 2018 budget. At the 2018 Management and Stakeholders Retreat of the FRS held in January, Dr. Ishek Maidugu, Director, Planning, Research and Statistics at the FRS, presented the 2018 draft corporate plan of the service. Of course, that is essentially how the Federal Inland Revenue Service expects to deliver on the mandate given to it by the federal government, to deliver 6.747 trillion naira.
This talks to our key goals in 2018. As a tax administration, we intend to aggressively, if I can use that word, to focus on these four key areas, four key goals. One is to maximize revenue collection. Goal number 2 is to encourage voluntary compliance. Goal number 3 is to improve service delivery to our customers, our clients, the taxpayers. And then our goal number 4 is to strengthen the organizational capacity, the capacity of our staff to deliver on the mandate. Goal number 1, like I said, is about revenue collection. We've been given a target of 6.7 trillion for 2018.
To achieve this,
we intend to develop a service-wide audit plan and make same available to all field offices. We will increase capacity and capability of audit staff. We will prioritize case selection based on size, sector, and basic risk assessment. We also intend to use third-party information to support audit, information from the bank, from customs, and then the Corporate Affairs Commission, as well as other third-party information will be utilized. As part of process of improving audit, we will institute processes to pre-check file returns to confirm authenticity of information supplied. We will automate and segment audit systems according to specialized industry sectors to meet their peculiar specialized requirements. We will develop a risk management strategy that is anchored on the FIRS corporate strategy and a risk mitigation plan for both compliance and institutional risks. Our goal number 2 is to improve voluntary compliance. As part of best practice, we intend to put in place strategies that will encourage voluntary compliance on the part of our taxpayers. Some of the strategies include, we will provide incentives to compliant taxpayers and mete out appropriate sanctions to non-compliant taxpayers. Annual recognition celebration of 20 compliant taxpayers nationwide will be conducted in 2018. So we'll encourage our taxpayers by recognizing them, by celebrating them, the top 20, as a means of improving filing compliance in 2018. We intend to create more public awareness on e-filing. Our goal number 3 in 2018 is to improve service delivery. Our objective here is to deploy technology to ease tax operations. In particular, we will ensure the full utilization of the e-solutions that have been deployed. The 6 e-solutions that have been deployed by the service will make sure that it's fully utilized by our taxpayers. We'll also ensure full utilization and adoption of ITAS as a singular source for all tax administration processes. The VAT collect in key sectors will be implemented, as highlighted before, in aviation, in hospitality, in power, in telecoms, banking, construction, and other key sectors of the economy. We also intend in 2018 to implement an electronic document and record management system in all FIRS offices to ease tax operations. We also intend to pursue the harmonization of the FIRS database with external databases such as banks, the National Population Commission, National ID Card, the VIO, the Road Safety, and other government agencies, so that we will collaborate and then harmonize our database with a view of getting the required information to collect the right taxes from the taxpayers. We will create an e-filing desk in all offices to assist taxpayers who are not equipped to use this facility. Then improve taxpayer service. We intend to develop an effective taxpayer service delivery plan. We intend to provide unique quality tailor-made taxpayer services to all taxpayer segments. We will strengthen the Servicom to entrench the culture of efficient service delivery. We will effectively follow up to ensure prompt response to taxpayers' inquiries and requests. And then we will conduct a taxpayer perception survey to be coordinated by an independent body to evaluate the feedback received from the exercise and use it to improve taxpayer service strategy. The last goal that we intend to focus on in 2018 is to strengthen organizational capacity. We want to work on the human element in the service to deliver on our mandate. The objective here is to improve performance management. The initiative will include provide staff with the necessary support for high performance, the tools, the technology, and then the skills required by our staff in order to deliver on the mandate.
The Federal Inland Revenue Service FIRS calls on all corporate organizations operating in Nigeria to register for the purpose of payment of taxes and obtain a tax identification number TIN. All registered companies must obtain a tax identification number immediately from the nearest FIRS office. You can also collect and return tax registration forms from the Federal Inland Revenue Service Engagement and Enlightenment Tax Teams, FEET, on compliance checks exercise in your area. A company which is yet to commence business after at least 6 months of incorporation must pay a pre-operational levy of 20,000 naira in the first year and 25,000 naira for subsequent years to obtain its tax clearance certificate TCC. Note that filing and payment of VAT and withholding tax returns must be done on or before the 21st day of every month. Register for VAT. File all tax returns as and at when due. Be a responsible corporate citizen of Nigeria. It pays to pay your tax. This message is from the Federal Inland Revenue Service.
We wish the FIRS every success in its efforts aimed at reinvigorating the Nigerian economy. Just as we pledge our full support in that regard, we also join our voices to the calls for early passage of the 2018 budget. To you, our viewers, we pledge our continued commitment to delivering to you quality information and education on taxation every week. This same channel, same time of the week, same time of the day. Have a blessed week ahead.